Hello everyone, I'm glad you tuned into this episode. My name is Mary and I'm your personal trader. Want to trade double top patterns for consistent profits? You're in the right place. Today I'm going to show you exactly how to trade double top chart patterns, including how to determine targets. So if you're ready to trade double tops like a pro, you're going to love this. If you want to participate in trading sessions with me and receive signals from me, then subscribe to my Telegram channel. The link is in the description. So let's analyze the double top pattern. This pattern usually forms at the end of an uptrend and often predicts a trend reversal. The double top is easy to identify by how it forms. First, the price reaches the highest level. Here we have a typical uptrend. Then the price corrects and decreases. Next, it rises again, but not as strongly. It reaches approximately the level of the first peak, and then it decreases again. In short, two peaks at the same level, hence the name. After that, it declines and breaks through the support level. This pattern indicates that buyers can no longer push the price higher, that everyone who wanted to buy the asset already did so. Similarly, the double bottom pattern is formed. During a downtrend, the price reaches a minimum, then rises and again falls to approximately the same minimum. There, it gets a reaction and starts to rise. Similarly, the double bottom pattern indicates that the market has reached its bottom. All the bears have already taken short positions and the bulls are gaining strength. When the market realizes this, a sharp rise usually begins. Now I'll show you a couple of these double tops and double bottoms on the chart. For example, here you can see that the price initially moved upwards. Then it reached its bottom and retraced. That's the correction. Then the correction ended, and the price began to decrease again, gradually reaching the level of the first minimum. However, the price couldn't break it, only came close enough. Bulls started buying, bears had no more money to sell, so the price corrected again. There it broke the base and an aggressive rise began. That's how candles and patterns tell the story of the battle between bulls and bears. In short, the trend reversed. Now let's look for these patterns on the chart and trade. So, this is the Euro and Japanese yen chart. But the main point is not that, but the fact that the double bottom pattern has formed here. That's why I'm entering a trade for an increase for 3 minutes. The trade amount is 3% of my deposit. I have a new approach to money management. Now let's figure out why I'm choosing an upward trade here. So first, the price moved in a downtrend. I'll mark it with lines. And then it formed the first bottom, which it couldn't break. Note that a bottom or peak is not always represented by a single candle. Then a correction started. During the correction, the price formed a peak. It is lower than the previous peaks. Then the correction ended with a strong red candle. The price dropped and formed the second bottom. More precisely, it attempted to do it several times. But the second bottom was formed at approximately the same level as the first one. From this point, we can consider that the price encountered a support zone. I'll mark it. And this is a strong support zone as the price during downtrend after the correction couldn't break it. Consequently, the minimum was not updated. The price simply tested this support zone, thus forming a double bottom, and then went up. That's how the pattern formation was completed. For the double top pattern to form, the price must break the baseline. The base is where the correction from the first bottom ended. The price broke the base level with two large green candles. From this, I understood that the pattern formation was completed, and I could confidently open an upward trade. Now I can wait for the trade to close in a minute. Well, the trade has come to an end. I made a profit, but it was close to being a loss. $250 net profit, not bad for one trade. The ideal pattern execution was hindered by a resistance level above. The price was rising steadily, but then it encountered a reaction from the level. Well, it's okay. The main thing is that I made a profit. Now let's look for the next double bottom or double top. Here I immediately open a second trade for 3% of the deposit for 3 minutes and for a decrease. This is the Australian dollar to Swiss franc currency pair. Well, do you see the double top here? Let me show you where it is and why I entered the trade here. As you can see, the price initially moved in an upward direction in an uptrend. Then the bull strength was depleted. The price formed a clear first top, after which the expected correction began. After the correction, the price sharply rose and approached the resistance zone. It returned approximately to the same level where the first top was formed. Most likely there is a strong resistance zone with significant sell limit orders. The price did not go above the zone, which is a good confirmation. Additionally, from the resistance zone on the chart, a bearish pin bar was formed, which indicated an imminent reversal. Therefore, I decided not to wait for the full formation of the pattern. That's how I broke the rules and opened the downward trade right at the top without waiting for confirmation. Now I expect the pattern to complete fully and the price to break the base level, and I will profit from it. Let's wait for the trade to conclude. The second trade will close in just 3 seconds. As you can see, everything went very confidently. So try to observe double bottom and double top patterns on the charts. They are really easy to profit from. Thank you for your attention, and I look forward to your subscriptions to the channel. Do not miss new episodes. I hope you find it interesting to follow along, because it's interesting, right? Text me in the comments.